Jeffrey Cohen, Chicago Quantum. How are you today? We're going to talk about stocks, stocks of interest. We're going to talk about the market. We're going to talk about the top 10 drivers in the market. We're going to talk about so many things. We have what we call a Taylor Swift stock portfolio. Now, we do invite Taylor Swift to join the show anytime you want. We'd love to have you. We're going to share the stock picks. We're actually going to walk through them all, talk about what they do and where we're at, and how it's different than if you just bought one stock individually. So, Taylor Swift model, stock picks or Chicago Quantum. We're going to walk through some of the model output. We're going to talk about top 10 drivers that push stocks. We're also going to do a little bit of a deep dive on IonQ. And we're doing some homework on IonQ right now, looking at a possible investment, as well as, we keep up on all of the quantum computing stocks. We've been in the quantum computing field now since 2019, and it's interesting to us. I'm just going to share stuff. So let's start it off. First thing is the stocks, the picks. So what do I have here that's interesting? So I've removed any of my own personal holdings so that you don't have to see or be, confused by it. So the first thing is, AppLovin. AppLovin's at $40. What's so interesting is it's 800 price to earnings ratio. I believe that AppLovin and Atlas Lithium and New Oriental and Tal and IonQ and even to some extent Affirm are being pumped higher. They're being short squeezed. And it's unfortunate. But we're stuck in it. We're actually short AppLovin. We think it's terrible valuation for what you get right now. But we also understand that you can be wrong for a really long time, and that's okay. The other two stocks I think are interesting is Digital Turbine and Skills. I bought them last Friday. I sold them last Tuesday, or this past Tuesday. And Digital Turbine and AppLovin have been falling dramatically. Talk about, catch a falling knife. Those are down in the dumps. And good values. Valuation is good. Fundamentals are good, but it's just tough right now. So let's talk about just one or two other stocks of interest. So Fathom Digital Manufacturing Corp has a market cap. It's not 386 million. The market cap is like 10 million, 15 million. And this is a stock where the company bought a whole bunch of manufacturers and then overpaid and can't make enough money, and revenue fell 40%. Their contract manufacturer, they do the speed, prototyping work. Watching it today, it's unfortunate they just reverse split to get over $1, and it's not doing great today. I bring Corbis up for another reason. So now let's focus. The top picks for anyone to get excited about in the model were Affirm Holdings, Checkpoint Therapeutics, which is a lot like Corbis, which we used to talk about for 2 years, Open Door Technologies, Cardlytics, Carvana. And there are combinations of these 5 stocks that have a better risk return than others. And so these are the stocks. These are the 5. And what I can say is I can tell you about those stocks. It's so fascinating, right? So Jeffrey, you've got all these stocks. So what do you want to tell me? Well, I'm going to go to the blog because we just talked about them today. Today was a massively risk-on day in our model. Today screamed buy, buy, buy. So one stock is a buy now, pay later and personal consumer loan at time of purchase company. They own, they make and buy back the loans at up to 36% interest rate. The second company is an emerging biotech stock. Looks a lot like Corbis. They do oncology for solid tumors. The third company offers an e-commerce platform for residential real estate transactions. That seems cool. You want to buy and sell direct? You want to buy and sell to a middleman? The fourth stock did not quite make the list of the best three. It's a bank to consumer digital advertising platform. So how do banks advertise to customers? How do they know how their ads are doing? The fifth stock, and that's a whole theme of digital monetization. The fifth stock, they sell used cars, and then they hold the loans that they make on those cars. So they make money on the interest rate for somebody buying a car, and then they make money on the used car. So this overall portfolio, the Taylor Swift portfolio, is based on the strength of the consumer. Another reason we call it the Taylor Swift portfolio is it's a portfolio that does well when the consumer does well, when the consumer feels flush, makes purchases that maybe are for fun, and then pays their bills. Taylor Swift did well when people would pay $1,000 to see a concert and then probably borrow the money to buy the tickets. But then also stay current on the loans. And then one of them is just a microcap biotech, which, has its own risk. So those are the stocks that our model is picking right now. There's some other details about those stocks. So let's talk about it. I call them technical notes. So the one stock, the micro biotech, is below 250 million in market cap. And you're going to see that the shorts are almost all below 250 million. And the shorts, a majority of them have fallen 50% or more over the past year. In fact, though, a third of the stocks that you should buy and hold are also down 50% or more for the past year. So there's a lot of falling knives that the model likes. Maybe they're going to reverse. Second is the volume of all 3,001 stocks is 102% of the average volume for the past year. So the market did well yesterday. Let's see if I've got a chart. I don't, but I will. I'm looking at Albemarle. Nobody cares about Albemarle, but I like Albemarle. So if we look at 5 days, you can see Thursday the market went up. It went from like 42.80, and it went up all the way to 43.15, and then it closed at 43.04. So it was a good day. It was an exciting day in the market. Now it's up again 0.5%. So you'd expect on a big day like that, volume would be up. It's not. Volume's flat. It's 102% of the average for last year. The average dividend yield for the 3,001 stocks in our analysis was 1.73% actual paid versus average price. So actual average yield was 1.73%. It's not a bad dividend yield. I actually thought it'd be much lower. The average beta was 1.175, or 17.5% higher than the S&P 500. Now you got 3,000 stocks. You would think that those stocks would have a beta of 1, that they would average out. They don't. They don't, because what happens is the S&P 500, which is a synthetic passive index that's market cap weighted, has lower risk. That's why people like it. And so it reduces risk versus just buying and holding a whole bunch of stocks. And then here's the last thing. This market is pushing risk to the extreme. The best stocks in our model reflect the health of the lower end consumer in our economy, right? These are companies, these are stocks of companies that they use cars. They sell used cars. They sell homes direct, not going through a 6% broker. They allow you to borrow to buy things on eBay and Amazon or plane tickets. This market is pushing risk to the extreme. And so I just want you to know that, right? So if you were to hire us, pay for the run, or pay for us to make the trades for you, you're on the edge. You're betting on risk. But the model has a dramatically positive confidence. The confidence or the edge is much higher today than it has been almost ever before. So that's what's going on with the picks. I did share them with you. If you want me to say them again, it's Affirm Holdings, Checkpoint Therapeutics, Open Door Technologies, Cardlytics, and Carvana. AFRM, CKPT, Open, CDLX, and CVNA. I'm not saying these are good stocks. What I'm saying is that these are the stocks that you would buy for the next 20 days to beat the market. And if you look at them today, They're up on average about 5%. So if you put 10 grand in, you'd be up $500. You paid 100 for the run, you made 400 profit already. You could sell by 9:45 in the morning and walk away a winner. I love that story. That's your story right there. So the second thing we're going to talk about is IonQ. So I've been doing some homework on IonQ. It's very important to me to understand the quantum computing business industry because that's what I do. And so IonQ for the past year has done remarkably well. It has just ramped from May 1st. It has just ramped higher. It's tripled. So that's great, right? From 1 billion to 3 billion. And so why is that, Jeffrey? What's going on with IonQ? Well, the thing that I noticed is a volume of stock traded is very high for IonQ. It's in the tens of millions of shares. Oh no, that's the Russell. Go back. IonQ historic data. We'll look for the past year. And you can see, like today, we've already traded 5.4 million shares. It's been an hour and 15 minutes. It traded 15 million shares for the last 2 days. This is a stock that is eager to trade. That's a lot of the shares. I want to say that there's 200 million shares. And so 200 million shares, but we're trading 15 million each day. See, back in March when the stock wasn't doing so well, you were trading single digit, 1 to 5 million shares. And so 15 million shares means there's a lot of interest in this stock. It's getting scalped, it's getting traded, day traded, right? It goes up $1, it goes up another $1. People are making a lot of money. They're probably buying and selling the options. A lot of excitement here. And so IonQ. Let's get the full screen. Let's take a look while we do it. And you'll see that the MACD in this thing, I'm going to do a daily chart, candlestick. You can see stochastic momentum. You can see the RSI. And you can see the MACD, or whether it's accumulating or not. So I find these all very interesting. So, and I compared it against the other short squeeze stocks. And you can see the pattern is basically the same. There's a little bit of a timing issue, but people like these same stocks together as a group. And so we're going to look at date range. We're going to go August 1st to today. And you can see IonQ has been moving up and down in a trading range. Let's go July 1st. I want to see how long we see that trading range. There it is. Up, down, and it's popping back up. So people like a trading range, a 50% trading range. They make a lot of money trading that. And so this is the IonQ story. So what did we determine when we did our homework on IonQ? Well, we looked at the financials. We spent a lot of time and we talked about it. And so net, IonQ is spending a lot of money right now developing their quantum computer and promoting their quantum computer, marketing it, building a global team that could promote it, that could drive adoption, drive excitement. Now, when I looked at the overall investment spend on quantum computing, it looked a lot lower than I thought. And so there's different ways to look at it. But it looks like IonQ has hired a lot of people, but they're not really capitalizing a lot. So for the 6 months ending June 30, where they lost, I don't know, $60, $70 million, they capitalized $2 million in software development cost, and they capitalized $2.4 million in property and equipment. That's about $4.4 million out of 60, 70. That's a lot. Yeah, 60, 61. They lost 61. So IonQ is it's rough, right? To spending a lot of money on people and on promotion. And they've had a lot of press releases, which is tremendous, right? They got a Forte platform. They've got an upcoming I can't remember, Tucson platform. And so some challenges and some opportunities for IonQ. So most of their money comes from government contracts and from working with the University of Maryland. So Air Force Research Lab, other government funding, national labs, University of Maryland. That's interesting. Plus they signed a contract with Quantum Basel out of Switzerland to sell them equipment. That's something. The ion trap system. So they didn't actually build the system yet. So they have to actually build the system, and people have to come. It's interesting. So what else was in here that was really huge? So if their computers actually fail to achieve broad quantum advantage, then it's possible nobody buys them. Nobody gets any business value. So that's interesting. There's a whole question of if we build it, will they come? And that's what they're trying to solve right now. Another interesting factor was the cloud providers. AWS, Microsoft, and Google. See, they might decide to take this market for themselves and not to allow IonQ to be successful. They might even buy a competitor like Rigetti and make Rigetti's system be successful. Rigetti is using a different kind of circuit. Think of it as a solid state circuit, like an Intel circuit, Josephson junction. And IonQ is using like a barium ion or a ytterbium ion, and they keep it, and they trap the ion, and they zap lasers at it, and an ion's really small. So whether you're going to do a chip, whether you're going to do ions, whether you're going to have multi-processor ion traps that come together, and you can talk from chipset to chipset. I mean, that's all technically a lot of mumbo jumbo for you, but the point is it may not work. And even if it does work, maybe nobody wants to use it. The other is, I love this line from the last quarterly report. We have not produced a scalable quantum computer, and we face significant barriers in our attempts to produce quantum computers. By the way, it's hard. I know that. And quantum networks are hard too. If we cannot successfully overcome these barriers, our business will be negatively impacted and could fail. That's rough stuff. Now, they do have a 32-qubit system, gate-based quantum computer, that achieves, I want to say, 29 algorithmic qubits. So out of 32, they must have 10% that they use for like system management, system control, or just errors. So that's not bad. That's something. We'll take it. It's interesting what they're doing with University of Maryland. Lots of good stuff here. Lots of good stuff. So IonQ is a bet on the future, which I always find interesting. And so, yeah, love it. Interesting stock. So we look at FATH. Unfortunately, it's down. We look at IonQ is up. The squeeze stocks are up. Today's a risk-on day. So let's talk about our model. Share the run a little bit. Now this run cost you $100. If enough people buy it, I won't show it on videos. I'll actually just show it to the clients, and then we can talk. You can call me up, hit me on the cell. Hey, Jeffrey, what do you mean? By the way, we're constantly doing testing and fixes and improvements, and so that keeps going. Woo, that was a big sneeze. I'm so sorry. Napkins and tissues out. Oh, boy. So, hang on a second. Got to make sure this is the right version of the text file. Yeah, it is. 3,000 stocks. 18.5% expected return to the market. This market has screamed higher for a year. I don't know what everyone's talking about. And the variance of the stocks continues to fall. It was 4 a couple days ago. Now it's 3.89 or 3.9 10 to the negative fifth. The variance of the market is lower, and also the stocks, the best stocks, are dramatically better than the S&P 500. So there are many stocks that have such a high expected return that it blows away the variance that you could expect. This is why the market's going up. The market's going up because the risk of holding those stocks is less than the return that the big money people are expecting. It's actually a pretty simple bit of math. And so I love it because I understand it. And then there's even all these garbage stocks, tiny cap stocks, where people are probably, they got $1 million. They could pretty much control the market in a small cap, $10, $20 million company. And they make money because they know when they're going to push it up and push it down, buy and sell, whatever. So the other thing I wanted to show you is the model has 80 ticks of edge. That's a tremendous edge. It's a tremendous edge. If you bought a firm and checkpoint, it's 80 points of edge over the S&P 500. Let's see if we can see that. So if we look at the S&P 500, it is up a half a point. SPY, 0.46% up, which is not bad. 25.3 million shares traded, or 25 million shares traded on the ETF. But let's take a look at a firm. A firm's up 5%, or 10, 11 times the amount. And that traded 6 million shares. And then Checkpoint hasn't traded much. It's flat. So you would have made 5, let's call it 3. 2.5%, 3% on your money in 2 hours. Hour and a half, 2 hours. And then you can leave for the day. Now, if you would have bought all 5, because you're like, Jeff, I don't want to buy just 2, I want to buy 5. I'm going to buy these 5. 73 points of edge. I'm going to make 5, 1, 3, 6, 3. I'm going to make about 4% of my money. And I got a bunch of stocks. I got theoretically less risk. Great. Done. Wrap it up. Made money. So the model loves this type of day-to-day. And this is what we see. So I want you to know that because it's so interesting. Now, it doesn't always pick these kinds of stocks. But the market is screaming risk on right now, which is so funny because everyone's worried about government shutting down and all that kind of stuff, and this is what we see. So we're going to go in now, and we are going to, while you're watching, we are going to update our table for the top 10 stock market drivers so you can see how we do it. It's a little bit fast. It's a little bit what I call, the quick and dirty way to do it. And I'm creating a Yahoo Finance portfolio of ETFs that'll give me this data quickly. So let's do it. Let's share and let's show it and let's do it. I love this stuff and I'm trying to automate as much as I can. It's just so interesting. Let's look at the top 10 drivers. And by the way, I removed our holdings so you wouldn't have to worry about it. I didn't want you to have to see it because sometimes you don't want to see it. Do you really want to see it? I don't think you want to see it. I don't know why I can't see. I don't have a view that shows me the name of the stock and then also how it did. I sure wish it did. This is all the pre-market stuff. I'm going to need a new... oh, here it is. Yeah, perfect. All right. How do I do this so I can actually see it all? Maybe I need to make some of these a little smaller. Not too small. I want you to still be able to see it. Okie dokie. So stock price excuse me. Stock price volatility comes from our model. The S&P 500 variance is 2.2, which is about the same. And the variance of all the stocks is 3.89 or 3.9. I'm going to put it here. I'm going to leave the top stocks up so you can see them. We have a lot of different metrics on stocks. It's really helpful to just get a snapshot of the market every day. So stock price volatility is down again. 3.9 times 10 to the negative fifth over the past year for 3,001 U.S. listed common stocks. It's down again. It's actually, I should say, down. In a committed downtrend. And there's the value. That's great. Stock price momentum. One of the things we do is we look at all the stocks that ran, and we take a look at the sum. Now, there's a lot of stocks here that don't have market values. There was a problem, so we can't tell you that. Not today. Sometimes Intrinio just struggles with this. So we'll stick with yesterday. And the market is choppy in a flat trading range. Why is that there? I don't know. High yield corporate bonds. So for the dollar, it's interesting. There's a couple different ways to look at it, but they're all down about the same. The dollar is down today. Dollar's down today. That's down here. Lower today, but an uptrend. High yield bonds, HYG. It's up today. 74. It's up today. It's actually been down, but it's up today. In a downward trend. Okay. Real estate. We actually found an ETF that tracks real estate. By the way, I should probably reorder some of this stuff. So, stock price momentum we don't have. So, high yield bonds should pop right up to the top. There's my bonds. Okay, HYG. Then real estate. I have a REIT ETF, a big fat REIT. And that's up. And that's up today in a downtrend. So what's interesting is, so metals. So where are we at? Platinum's up. And these are important because gold is in a different category. So you have platinum, you have silver, and you have copper. And we notice that copper has risen quite a bit in the last couple days. But it's still below the 50-day moving average. Silver and platinum. So maybe we just compare it against the 50-day moving average. So these are up. But below 50-day moving average. That's technically maybe helpful. Energy prices. You have oil. So here's the thing. I got crude oil and I got a U.S. oil fund. And I got a micro WTI. So what I'm going to do is I'm going to just keep the crude oil. I'm going to get rid of these others. And I'm going to get rid of the extra dollar index. I like the future. Boom. Delete. All right, so energy prices. I have oil down. I have natural gas down. Down today, but these are way up. No, natural gas is not up. So down today, oil above 50 DMA, natural gas, nat gas, below 50-day moving average. It's good to know. US dollar, I think I know the answer to that one. The dollar is down and the bullish fund is flat. The dollar's down slightly. The dollar's been super strong. Yeah, lower today. Lower today above 50 DMA. Gold. Gold is down and down. Down today in a downtrend. Below 50 DMA. U.S. Treasury long bonds. We know the answer to that. But I've got another edge here, another angle. So we look at the yields, and the yields are significantly higher. So the bonds are lower. Full stop, we know that. So what's interesting is that the yields are lower today, and the bonds are higher today. So what I want to say is bonds are up. Significantly below 50-day moving average. And then there's another way to look at the bond thing. There's a question about real tips. Real interest rates. And then the real interest rates, this is, we're going to use the iShares tips bond ETF. They're down. So it means the bonds are, the yields are up, the bonds are down. So this is also, it's really flat. Significantly below, no it isn't, it's just below. Flat, below 50-day moving average. So you might have a question there about what that means. So when interest rates go up and inflation goes down, or interest rates go up faster than inflation, then your real rate of interest that you earn if you put your money in the bank is up. And there's a question about why that would be. That is odd. U.S. government cash intake, I struggle with that one because I don't have any new data. I didn't feel like taking it. But we have a 2-week net reduction in liquidity. So let's just, no, right here. Net 2-week reduction of liquidity. And then Bitcoin price. Bitcoin's flat, but it is, it's actually flat, and it's flat with the 50. Flat at 50 DMA. Okay, so Bitcoin hasn't really moved. So is there anything in here that's not technically like... Oh, and then I have all this VIX stuff. So the volatility index. I should probably... I don't need 4 of these. The VIX, the VIXY, yeah, I'll keep them. I'll get rid of that one. So the VIX is, yeah. So the other way to look at stock price volatility, so you have historic, and then you have implied volatility, or what I'd call the price. And so this is 3.9. And what we want to say is it's down in a downtrend. I have to say that. And then the other one is, this is, the VIX is actually down, but it's weird because it's up. So the VIX is actually, it's showing, it's so interesting, it's showing that it's higher. The ETFs, lower, showing it's lower than the ETFs. I don't know, this is crap. So I think I know what the answer is, but it's not showing properly. So this is down. It's down. And it's below 50 DMA. But truthfully, it's up. So it's down. Up recently and below 50-day DMA. So it's really crazy. This implied volatility is actually the VIX. So I think I covered everything. It's nice to see all that, right? Like this is what you want to know. And then I've got all these, right? So what do I need? I've got the VIX. Oh, mortgage-backed securities. Not that exciting. 13-week treasuries. Not that exciting. So I'm going to take those out. A couple different dollar things. All right. So that's what we got. Those are our top 10 drivers. So when you look at it, it tells you kind of where we're headed and where we're going. And I publish this. I update it as much as I can. Top U.S. stock market price drivers. So hopefully you find some value in that. What else are we going to look at? I'm going to get rid of that. I'm going to shut some things down for you. So this one I'm going to publish. I guess I'll tell the world that we have new stock market drivers. See, table wasn't full, table's full. Copy, let's add it here. We updated and published the page. Bam. And then let's go on Twitter. Top U.S. stock market price page with a simplified table. Frankie's here? Oh, good. I'll go talk to him in a minute. Here's the table. Please provide feedback. Thanks. That would be helpful. So I'm going to have to end the stream here. I will. I got people at the door. By the way, we're updating our brochure. We're lowering all our prices consistently, theoretically. So here's our YouTube page. There's our YouTube page. By the way, we don't have a lot of subscribers, so maybe if you guys want to subscribe, that would be helpful. Now, if we get to 1,000 subscribers and 1,000 hours of view, then we can make a free cup of coffee every day, which would be terrific. So we do follow. I'm just going to walk through the stocks I have up here. Summit Midstream, limited partners. It barely trades, though. I like that stock. I like the company. AppLovin, gotta hate the stock. And I'm losing my butt on it because I think it should go down to about $10. They have $2.95 billion of debt, all flexible. Outdoor Technologies up 3%, always interesting. Cardlytics is one of the picks of our model. Financial services, banking, advertisements, that's up 5%. You would have made a lot of money if you would have bought the model picks. Let's go back to the model picks. 1, 2, 3, 4, 5. Yeah, I made a boatload. I was actually going to buy all 5 today and then show them to you, show you the portfolio, show you the actual brokerage statement. I didn't. I should have been buying this thing for like a month. The model's really been spot on. It's just that I haven't been. So we did a lot of work on IonQ. Just so you know, there's a lot of financials out there, a lot of SEC filings. That's what we're going for, data. There's no private or secret information. It's all public information. In fact, I know Chris Monroe. I haven't reached out to him. I haven't reached out to any of those guys to find out. I'm just doing the homework that everyone needs to do. S&P 500 is up slightly. Albemarle is interesting for lithium. What else do we have up here? You know, not much. Oh, we had a short issue with something that I fixed, which I'm really happy about. We worked with Intrinio. They're very, very helpful. And there it is. Blue check mark. Blue check mark. We are a validated entity. I just want everyone to know that. Blue check mark. And you know why I do that? Because somebody was a real jerk to me once. I'm doing it for you. I'm doing it because I want you guys to know that we are legit, that we are actually who we say we are, and that we are not, there's no shenanigans. That's what's important. No shenanigans. Okay? So there you go. Blue check mark. Wrap that up. All right. So thanks for watching. If there's stuff that you want to know, let me know. If there's stuff you want me to cover in the next video, let me know. I'd be glad to do it. So net on IonQ. There's a ton of information that's available. At the end of the day, it's going to come down to this. Number one, do you believe they could produce the quantum computers? Because it's science, research and development. It's not real yet. Number two, can they compete with IBM, Honeywell, Google, Amazon, Microsoft, Rigetti, D-Wave, and others, and all the private guys? That if they all hit quantum advantage, that they're going to win, that people are going to standardize on their hardware. It's a lot of questions. And then the third one is, even if they did all that, will the quantum computers be profitable to make and to ship? I do believe these guys have a great leadership team, and so who knows? There's a chance. So that's where we're at. And good luck. Hope you liked the video. If you liked it, give it a thumbs up, drop a comment, let me know you liked it, and subscribe please to the channel. And maybe, I really ask you, share a link with your friends and have them check it out too. All right, take care. Thanks for watching. Bye-bye.